Welcome to another episode of Price Targets with your host Bitcoin Jack. Welcome back, guys. It's going to be an interesting stream. We're going to be talking about a bunch of stuff that is related to this list I posted yesterday on Twitter. The market seems to be at a crucial pivot level, and I think tomorrow with the FOMC, we'll see some resolve in direction. Generally, I think that everything is at resistance. And there's a few things that are interesting. Oil is below $60, which is an indication that probably there is we're seeing reduced shipments across the globe, especially between China and the US because of tariffs. That might be an indication that the economy is slowing. And currently the VIX is muted at mid to low 20s, which, kind of suggests that there isn't a lot of defensive positioning going on currently. At the same time, Taiwan is making changes to their monetary policy, where previously they would be diluting their currency such that it would be good for trade, so their exports would be preferable. And we're seeing that they're changing this, so the Taiwanese dollar is surging, and this means that they will have a stronger negotiation position. So that it's interesting because they're kind of like putting pressure on the US with the whole tariff scene, which may indicate that they're not as willing to bow, and that this is gonna essentially, it means that everything becomes more expensive for the US if they make their dollar more expensive. And last week, I talked about front loading. Basically, because of the tariffs in Q1, my assumption was that we would see like pretty good beats to earnings, because obviously, if you can order something now, knowing that there's going to be tariffs on it, you're going to do it now. So I think a lot of economic activity kind of got front loaded, and we're going to see some negativity afterwards. So earnings largely processed and priced in. We've seen an insanely strong equity rally. We'll talk about that. Gold is at an interesting level, and once gold starts to become weaker, that might indicate there is a liquidity problem. So for now, it looks good, but we have to keep an eye on gold. It has this insane weekly inverse dragonfly doji. Maybe there's one more leg left, and we're going to talk about Bitcoin at the key decision level. So before we dive in, I want your attention for Backpack and a little bit of a exclusive deal that I'm going to offer you guys. Here you have my commission page, and I have put in 20% of fees. So you're going to get a discount of 20% on all your trading if you sign up with my referral link. That should save you a ton of money over time. So if you like the content and you like a good trading venue, because I think Backpack is going to be a tier 1 exchange, sign up and you're going to have cheap trading fees. So back to this list and back to maybe we talk about why I think there's going to be not much change in the FOMC stance. I think deflation will show up eventually, but it's going to show up in the reports much later. And the S&P 500 has beat expectations, so they're going to see the economy as doing quite well. And they will, still be afraid for tariffs. I think tariffs are just going to slow down the amount of volume being transferred, and goods will become more expensive. But in generally, I don't think it's going to be that inflationary. But the Federal Reserve, Jerome Powell thinks that might be the case. So they're going to be probably lagging the market, and I think they should cut rates, but I don't think they will. And we talked about Chinese inventories, US inventories drying up. Let's see if I can pull a chart in. There we go. This is interesting because essentially what it means is we're seeing shipment prices globally dive in the last couple of months, and China to America's west coast going through the Pacific, we're seeing that dive as well. It's basically half price, 50% down. That's generally an indicator of volume as well. So this is just the price, the rates at which shipments go, but you see that if the price is half, then obviously the demand is also half. That's just a simple way it works. I don't exactly know whether that is a one-to-one relationship, but cheap rates mean less volume, and these ships have to operate. They have costs even when they don't ship anything, so they will lower their prices and hopefully still travel between the two countries. Otherwise, they will have massive losses. And same for the East Coast, China to the East Coast. It was 6.6, and it's sitting around 3.4. So that's also half, right? So that's interesting. We're gonna start with Bitcoin. I've marked out the levels here with orange and black. Black are the weeklies and orange are the monthlies. And we're kind of stuck with whether or not we're basically getting rejected of the level here and accepted above the level here, which means that we go into this trading range. If we can do that, I would not be surprised that we will run the highs. But for now, this doji here and the volume traded in this area, like in February, where I was initially long and then got brutally stopped out, that's our resistance right now. If price accepts below this monthly and weekly level here, that align, to me it seems that it's very logical that we'll fill this candle and retest the weekly and monthly levels below here. So it very much depends whether you think that S&P 500 and equities are about to come down. So the good thing here on the weekly is that we have a bullish momentum signal. But if this becomes a deviation, then it's a trap, and obviously that's going to suck because everyone's that kind of chased this and then longed into this level is fucked. And honestly, look, if US inventories go dry by like next week because no ships come in from China to replenish inventory, that's gonna set off a series of chain events where basically just in time supply chains get disrupted. People need to get paid, but they don't receive the money because they don't have any revenue, which then triggers this whole cascade of people not getting paid, and it's all on credit and just in time. So that's going to be a rough situation. And even if there's a trade deal to be reached, like in the next week or 2 weeks, you're still going to have this short period of time where the inventories won't get replenished because it's going to take between 20 to 45 days for shipments to arrive. So there's still going to be this like blackout period. And we're not guaranteed that we're going to see anything. And even if they're going to reach a trade deal, there's still going to be tariffs. So it does sound like it could have a period of struggling. So let's open the S&P 500 futures here. To me, it seems that obviously this is a very logical resistance. It's been support here, it's been resistance there. This very much looks like Bitcoin in a way where we're trapped in a small range. That's, in my opinion, going to decide where we go higher or not. If you go above this level, like 58.37. If you claim that, any retrace is a buy in my opinion. But as long as this is one of the strongest bear market rallies, and generally it's the strongest rallies are recorded in bear market rallies. This is resistance, and it's going to get respected, and we're going to trade lower into 53, 52, 80 right there, or possibly extended lower. So in my opinion, I was thinking earlier that anywhere in like 55 to 5600 was fair game, and we've even reached 5700, which some followers on Twitter have said that was a reasonable target, and I do agree. But I think that you got to be defensive here, considering everything that we talked about earlier. It makes a lot of sense that this is the kind of height of this is the top, right? And then it's going to depend on whether the economy is actually strong, whether good trade deals are going to get negotiated, whether we actually trade back to these lows of April, or whether we see support in the low the low 5,000s and consolidate for a while and then start breaking out to the upside. So that's kind of the game plan here. On the low time frames, it does look questionable. Last night there was a signal here to get defensive when there was this engulfing candle here. So I'll be trading this, being short during this candle here, and anything that reclaims this to the upside is going to indicate for me to get out of my position and wait for a new setup. That's pretty much it. And if we trade into the 55s again, 55, 80, 85, it's probably worth getting along in case it kind of does go up there. But if it loses this level here and doesn't reclaim it, and it loses the level of late April, then I think the top gets confirmed and we trade lower. So tomorrow FOMC, we'll see what happens. It's going to be a challenge for Powell to cut rates, because honestly, he's probably also not really a fan of Trump. So anything Trump wants is probably not going to get given that easily unless the market really gives instability. And for now, it just looks as if the market is quote unquote fine, right? Let's go to gold. Let me get rid of these. The weekly looks amazing. There's, in my opinion, still a level to go higher. It's been a massive rally. This is the third leg of the rally. And in my opinion, this current leg isn't finished. So I think this has to go up to 36, 37 at least. There is a chance where if you look at the lower time frames, this becomes truncated, but for now this candle looks very strong. It's engulfing the previous bear candle here, so I think it's just gonna start its next leg higher. As long as gold isn't really showing a ton of weakness, there probably is still, market-wide, we're probably going to be not as bearish, right? But if gold starts to show a lot of issues and starts to sell off, that might be an indication that the market is scrambling for liquidity, scrambling for cash, and gold is a very liquid market. So that's something I'm going to be watching. So here we have the oil. Oil is low, but if it can reclaim 60 and start rallying, if they start to decrease outputs, we might actually be fine here. The other thing I'm watching here is rates. If long-term rates can kind of hold, let me kind of put a few drawings here. Okay, so essentially these levels here. There's a lot of people who say that this is a bear flag. I'm not really convinced. As long as we hold this level and go up, long-term rates are gonna get down, which is gonna be a good thing for the dollar because well, brain fart. That's gonna alleviate pressure and currently what we're seeing is that everyone's selling everything America, and it would be alleviating if treasuries would stop being sold because that kind of dictates whether my thesis that it was a temporary phenomenon, it would kind of confirm that, right? um, ETH, it's been painful to say the least, but it's on on a big time frame. We're kind of in the inverse situation that we are seeing with Bitcoin and the S&P 500. We're inside this little range here of weekly and monthly levels, and if we start claiming that, the next kind of block to trade into is at 25, 26, even up to 2800. And honestly, if ETH BTC kind of doesn't manage to power out of this low, I'm gonna be so frustrated. But I'm still holding. So yeah, that's that. Not fun, but potentially rewarding. I've been able to kind of hatch around it with trades on BTC, and um, that's just the way it is, right? Sometimes you win big, and if this starts to kind of regain its strength, then we're certainly in that kind of environment where I will be gaining big. This has been an insane rally. If you look at ETH USD, let's see if I can split the screen and delete this. Go to weekly time frame here. Yeah, they're both regular. Good. This is a acute fractal. Put it like this, and let me put this like this. It's almost as if ETH is trading like one cycle behind Bitcoin, and maybe there's going to be one sell-off deeper. So if Bitcoin is bearish here, and yet like equities are bearish, then obviously we're going to sell off into the 0.886 level here of the Fibonacci retracement level, and that would mean Ethereum trades to like 1200s, 1280, 1180, something like that. Could be. Could also be that this is the bottom and ETH BTC is going to start to outperform. We could even trade into the 1200s here whilst ETH BTC performs better. It's probably not going to do that, but I am very convinced that ETH is following this template. So whether it's going to be from 1200s or it's going to be from here, I think this is powering up for all-time highs by sometime next year, or late this year into much higher, if you can imagine, right? So I think this is a one to keep an eye on. Let's see. Yeah, and then there's Fartcoin. it's holding up really well. But what I currently don't really like is how it deviated this level here. So if it can trade back above 120, I want to be long because there's obviously going to be a lot, another leg, and historic price trading above like 132 should see an illiquid trade because everything here was illiquid, and everyone who's short since whenever here is gonna get flushed out. So I think if you manage to do that, because this obviously is missing a kind of blow of top, then it's going to be a huge blow of top. If it does kind of lose this level permanently and doesn't show any strength, I do think it's going to blow past this low here into this block. So any flash crashes to like 80 cents or 70 cents are, in my opinion, a no-brainer. And I would start bidding below the wick here for upside. Let's see, I didn't chart Solana, so I'm going to do that next week. And I did chart Hyperliquid, and it's a bit of a, I don't know how to trade this. It kind of looks very similar to the position where Bitcoin is in, and Fiatcoin, essentially trading in a tight range here. I would expect that this, if this is bearish, it's going to trade below this wick, and then there's a possibility to long it into a retest of 20. And if we do get an extended period of bearishness because the global trade blows up, then I think it can actually retrace much deeper into the 786 or the 745 here, in the 13 range. 13 would be funny because 1 plus 3 is 4. Definitely a place to start bidding. And obviously it's kind of the spring in this reaccumulation here. So if that happens, that's a huge trade. But for now, like short term, if it decides to go below 17.6 this week, that's where I'd be bidding for a counter rally. Yeah, and this is the Taiwan dollar that I spoke about. Just to quickly show you what's going on here. They this has a lot of people who have exposure to that market in a pickle, and a lot of people who are relying on buying shit from Taiwan in a pickle as well. So this is a very strong negotiation tactic from the Taiwanese government or central bank. So we'll keep an eye on this, but this means that America is not going to have as strong of a negotiation position, which is, it's going to be a struggle because that is going to strengthen everyone else's negotiation position, and that's going to worsen everything for the US market, especially in terms of, expectations for inflation and the costs of doing business and getting chips, which obviously is going to be hurting a lot for the Max 7 because they depend a lot on that. So we'll see how that works out. I think that's it for this week. I hope you enjoyed this one. I think it was a decently interesting exchange. And sign up with my ref link on Backpack. You're gonna get 20% off the fees, and that's it for this week, guys. Next week I will be inviting you guys to a Telegram if you've joined with the referral link, and I'll explain how to do this next week. Cheers.